Hello, Ken from the Dyslexic Investor, and we're going to be looking at gold. So right now we're looking at gold futures on a one-year chart on a daily one-year time frame. All right, you can kind of see here we just hit an all-time high just today at 1454. So that's a pretty significant amount. And you can see keep going back just 3 years, we have not been anywhere near that. We kind of petered out around 1367. We kind of hit like basically a three tipper here, and kind of just consolidated down, and then kind of came back up ish to the same level and kind of consolidated back down to the yellow line. Again, this yellow line, reversion to the mean, the best thing that you could try to learn. So let's go actually at a further time frame. We're going to go on a monthly. So again, this is each of these candlesticks is 1 month, and this is actually 15 years. So this is just in 2005, gold was 30 for 1 ounce of gold was $388. Okay, at the peak it almost hit 2000. Again, like you can see gold kind of riding up even during the recession that we had in 08-09. It can kind of see it peaking up and then kind of coming down once it hit its top of 08, and it's kind of made its way down and continue to ride all the way up until the the middle of 2011, and then from that point on it's been on a downtrend and bottoming out around 2016 and kind of working its way higher. I do want to draw a couple of lines here. We're going to draw, so you can see this. We're just going to take this trend right here. Nope, that didn't work out, did it? Why is this not working? There we go. Let's do this. Okay, that does not working for me. What the heck? Draw trend. There we go. So that is that. Call it how you see it. And then you can do here. Oh. Upward movement. Consolidating. This could be breaking out from this level. You can kind of see. We'll do another. Oh, we got to do the active drawing here, don't we? Here to here. It literally broke out there. Which I don't have to draw these lines. Again, drawing these lines, a lot of people are not the most tuned for, because a lot of trend lines can just matter on what you're doing and what you're looking at. It's up to the user on how they use them. Trend lines are not usually the most technically sound, but let's do a Fibonacci retracement here. Want to see what this brings in. Alright, so it doesn't even come across to the 50% retracement that we had. Oh, this is not actually on the top. There we go. I want to be a little more precise here. So this is the 50% retracement from the previous high. So this is these are the resistance levels on the way up. And we can just go do also in the short term here. We're just going to do some quick little fib analysis here. We kind of hit the 127 extension here. Again, that's it. Look at the correlation here. The 1618 is also literally on the same level of the 50% retracement. So this could be significant retracement. So I'm going to go ahead and hide these for now, and we're going to go back to like a daily chart, because you can kind of see that these aren't even these are. Again, this is another $30 higher. This is a significant amount. We had a pullback already today, so we'll see what happens. It's been literally since the beginning of end of May, kind of been holding the 5 and the 8 here, working its way slightly higher. That being said, we can look at some other ones. So this is the futures. So this is these are expensive contracts, but we can look at like GDX. This is like a $27 ETF that does like the gold miners, and you can see here, get these lines out of the way, it's had a huge kick out here, and breaking an all-time high here as well. So if we go on the 3-year chart on this, it's not as high as it once was. But let's go back to the main line here, and we're going to go to the yearly. So you can kind of see here this kind of correlates. The high for this was 68 or 66.98, and the resistance here on this particular, the miners, would be kind of up at the 31.50 level, because that's literally the previous high, and the low for this is $12.50. Kind of see that there is some support at that level, that's a long way down. But you can kind of see here, just looking on the monthly chart, all these moving averages and exponential moving averages are curving up. So this is a good sign in the long term. So in retrospect, it literally could be like in early 2009 kind of scenarios of moving higher for the golds. So that's very interesting. I don't have any current gold positions. I was talking to someone the other day, and they're actually buying physical gold, which I haven't done that either. So that's interesting as well. You can see, but yeah, all these kind of just trade in tandem. This is GLD. This is the Spider Gold Trust, and they basically, it's a little bit more pricey, and it has the same amount of liquidity. Not as good as liquidity as the futures, but liquidity in the sense of if you want to play gold via like an ETF symbol. Again, this is gold is a commodity, okay? So these huge breakouts are pretty significant. Again, we can go back on a weekly chart here, and this is going to be a little more closer to the gold futures, the GLD. You can kind of see here it's literally breaking out from a 3-year high just a couple days ago, and it's been working its way higher. Like, these are all green strong candles. All the moving averages are pointing up to the right, so this could be a significant move that could stay. This little push or sprint up higher could consolidate around the 135, 136 level, kind of form a base, and then kick higher from that point on. It'd be interesting to see what happens from this point. Looking at some of the indicators I use here, the momentum is kind of coming down because that's selling off just slightly. The chicken and money flow, a lot of people are buying into gold. So this indicator basically covers industries and larger investments inside the a lot of hedge funds and so forth are buying this. So there's a lot of conviction in that. RSI did kind of almost tap out at 0.7 here, showing that it could be, doing air quotes, overbought. You can kind of see here it was slightly got into the red here and kind of made a huge push higher, kind of pushing out of the bubble and kind of retracing back down. Another chart that I like to look at is these are standard deviation. So this standard deviation from this white line, which is the reversion of the mean that I always talk about, basically the yellow line. And this are breaking out, also known as Keltner channels, but these are the deviations from the 21 simple moving averages. So this is one standard deviation, 2, and 3. Most stocks never hit the 3, but if they do hit the 3, they usually come back to the or the purple or the green or even the white. And you can kind of see here it broke out. Like, this is no man's land here, and it has to come back, and broke out significantly. Guess what? It's got to come back in because this is uncharted territory for those particular stocks. So it's very important for to be indicating and looking at that for a lot of different industries. Yeah, so that's my outlook on gold. I think gold can consolidate here again and move higher depending on what happens with a lot of the other economic developments. Again, with the Fed, with the trade with China, with that fun little escapade that they're going on there. And yeah, I think it doesn't hurt to have a little bit of gold of like 5% within your portfolio of gold stocks. But I'll definitely be adding some to my position, hopefully. Don't want to buy at all-time highs, but might have to. We'll see what happens Again, guys, don't forget to subscribe. Check me out on my other social media accounts. I kind of keep more update bases there. Again, catch you guys on the flip side. Peace.